All right, good morning all. My name is Harry Ma. I'm an investment manager here at Sharewise, and welcome to another Sharewise webinar. Today, we're very pleased to be joined by RKN Limited CEO Samuel Allert. Good morning, Samuel and Sam, and thanks for being with us today.
Morning, Harry. Thanks very much for having us.
Thank you. For those who may not be familiar, RKN is a leading tech services company that provides market solutions for accountants, bookkeepers, legal professionals, and also SMEs. So Sam will be presenting an update on the business, followed by a Q&A session. As always, we welcome questions from all attendees, so feel free to participate and drop some questions in the Q&A box below. The webinar, of course, will be recorded as well. So if you can't view the entire live webinar, you can find the recording on our YouTube channel, which we'll send out an email regarding as well. So Sam, over to you with your presentation, and we'll have some questions at the end.
Thanks very much, Harry. Yeah, really appreciate you and the team at Sharewise hosting us again this morning. Just to double check, mate, we did just share my screen, but I just want to make sure that it's still up or it's dropped out.
We might need to do that again, sorry.
Yeah, I thought so. Let's just...
There we go. That's it. Perfect.
Excellent. Well, thanks again, Harry, and thanks very much to everyone who's dialed in to listen to our update this morning. And for those who are watching the recording, thanks very much. I hope you're very comfortable wherever you're sitting watching this. So my name's Sam Allert. I'm the Group CEO at RKN, and today I'm going to share a summary of our full year 2024 results. Probably a really important piece up front is that we do operate in a calendar year. So the results to December 31, 2024 are a full 12 months, and that's what we're reporting on. So going through our full calendar year. What I'm going to do is just jump into an overview. So for those who may not have ever heard of RKN before, so we are a software as a service technology company. We work with SMEs in Australia and New Zealand with accounting and payroll software. And we work with legal practices, predominantly in the US and the UK, with practice management tools to run their business. We've been in business for well over 35 years, again, headquartered out of Australia. We've been listed for more than 20 of those years. And so I just thought I'd start with our investment highlights. And again, this is based on our full year 2024 results. So we've got a very strong earnings profile, 54 million generated in revenue, 20 million generated in EBITDA, and just under 4 million generated in NPAT for the full year. And our financial strength has been something we've been very, very proud of for many years. We're a dividend-paying company. So we again paid an annual dividend of 2.5 cents fully franked. We paid that in September 2024. And our guidance to the market is that our dividend policy remains in place, and we will continue to, the best intention is to continue to pay an annual dividend at that same time. We finished the year with a tiny bit of net debt, 2.5 million of net debt. We've got a facility of 25 million, so plenty of headroom there for investments, which I'm going to touch on a couple of those shortly. And most importantly, some highlights from the last 12 months. So we've got two products and two markets that we operate in, and I'm going to deep dive into both of those. What we saw that in our legal group, that our annual recurring revenue grew by 13% in the full year. And in our business group, our cloud revenue subscribers was up by 7%, up to 111,000 cloud users or users of our cloud product. And then we finished the year really strong. Again, one big announcement in both groups. That wasn't the plan. It just happened that we'd been working on two strategic opportunities. So we announced an acquisition in Australia of a business called Cashflow Manager, whereby we added 20,000 SME clients to our portfolio. And in the US, we did another round of funding that was fully subscribed by existing shareholders, obviously, of which RKN is the majority. And the CEO is the second largest shareholder. So we fully subscribed that funding round into our US business, really to take advantage of what we think is some exciting growth opportunity in the legal tech market in the US. They're our investment highlights. I'm going to go through that in each of those points in more detail. So just a bit of a corporate overview. Our ASX code is RKN. You'll see our board of directors there, very experienced company directors, very experienced in our industry as well, and a lot of credentials on that board. And we're very, very proud to have some great funds and shareholders that have been with us a long time, and some funds coming in on the journey. So Micro Equities, MA Financial, as you can see, two big funds in Australia that are big shareholders as well as two of our board members, Clive and Greg, owning significant stakes themselves. So to the business, as I say, we work in what we consider as two parts to the business, or two groups. Easily the biggest part of the Reckon Group is what we refer to as the small business group. This is where we provide accounting and payroll software to SMEs in Australia and New Zealand. This is where Reckon started. So whilst we've owned other businesses and delivered other products over the journey, this is absolutely the core of what we do. Accounting and payroll for SMEs based in Australia. You'll see in the middle there that the contribution from this division to the group results is significant. So it's not only the core, it is the biggest part of what we do, with revenue of 41 million and 21 million of EBITDA in the full year 2024. Because we're focused in Australia and New Zealand, there's over 3 million SMEs in that market. So that's our market share and total addressable market that we can target within the small business group. The other part of our business is what we call the legal group. We've owned and operated this business for well over 15 years. It is actually headquartered out of the US. We've got a very good management team on the ground in the US, and we've also got offices in the UK. And as the name suggests, we provide billing workflows and document and administration workflows for legal firms. It's a smaller part of the group, but what we're really excited about is the growth potential of this particular division. So headquartered out of the US, we've got a target market of over 46,000 mid-market legal firms that we want to take our software to. So we're really excited about the potential high growth opportunity of this business. It's worth just stating there that these businesses run really well under the Reckon Group today, and I'll explain why. And at the same time, everyone, these businesses could potentially operate in a unique or standalone basis. And the reason they operate so well today is, again, the core of our business, whilst we generate a lot of revenue, we generate some good EBITDA, and it's a very strong financial business in terms of generation of cash flow out of the business group. And we're excited about the growth prospects there. But we take that cash flow and not only invest back into the business group, but it gives us an opportunity to fund what is a far higher growth potential in the US legal market. So at the moment, the businesses run really well together in the fact that legal needs the funding, and we can fund that out of the business group cash generation. But the businesses we don't share technology. We do run different support centers, etc. So there's not a lot of cross-sell of our products. They are different markets, and that's an important part to understand of the Reckon Group. Our full year financial results, so 54 million of revenue in the 12 months. Pleasingly, what we saw is a lot of growth in our annual recurring revenue. So it's funny that those numbers finished on just the same, but our ARR growth was 5%, up to 54 million for the full year. So we're going to get that benefit in this financial year, in the 25 year. 20 million of EBITDA, up 2% over the prior corresponding period. Just under 4 million of NPAT. And we continue to invest in our businesses. So $14 million invested into our products, predominantly into our cloud products. And the breakup of that is just under 10 million invested into our business group and just over 4 million invested into our legal group. And as I touched on, we continue to be a dividend paying company, and we declared an annual dividend of 2.5 cents, fully franked and paid in September last year. The next slides, what we're going to do now is just deep dive into each of the businesses. So I'm going to start with the business group. So again, cloud accounting and payroll software for SMEs. Our target market is anyone from a gig economy, a startup business, to a medium to large business. We've got some clients who have literally been a Reckon client for our whole journey, so over 30 years, and still going really well. As I mentioned, a very strong cash generating business. So a 51% EBITDA margin, and even after we adjust that EBITDA margin for development spend, a 28% adjusted EBITDA margin. We've got over 111,000 cloud users, which grew by 5%. And that's what the chart on the right shows. So the blue line is our cloud user growth over the journey. It's worth calling out if people are looking at that dip in 2023 and wondering why we went back. We had actually launched a free payroll app back in 2020, 2021. We got a number of active subscribers, and our plan was to move them to a paid version of payroll. We weren't seeing that migration to the paid version at the rate that we liked. So when there was a big compliance change, we actually discontinued the free app and made it a paid app. Therefore, we lost a bunch of users who weren't willing to pay. But in fact, our paid user subscriber growth, our paid user base grew in that period. The orange bar is our cloud revenue annualized, and as you can see, continues to grow, up by 7% over the full year 2023 to 26.1 million of cloud revenue. This is a really important slide to understand when looking at the Reckon Group. Having been in business and providing accounting and payroll services for over 30 years, we started as a desktop software company. So Reckon Accounts is a desktop business. In fact, we started by selling box software via retail stores like Officeworks and Harvey Norman. In the old days, Harry, you wouldn't remember those days, but where people would go into a shop and literally buy the box of software. They got a CD-ROM and a manual. We got a lot of clients who started as a client in those days and still are very, very happy clients. We took that code base and we hosted it in AWS, and that was our first foray into cloud software. It was also a very easy upgrade for our desktop clients because there was no retraining. It was the same product, same look and feel. For the last 15 years, though, we've been investing and developing our own cloud true SaaS product, being Reckon One and Reckon Mobile. And this is where we get all of our new subscriber growth today. There's very few businesses, there are still some, but very few businesses today are looking for software that's not on the cloud. We all know the benefits of the cloud, of mobility, access, share it with everyone. So all of our new subscriber growth comes in our Reckon One base. We've been building out these features, and we're also on a multi-year journey whereby we're upgrading our desktop and hosted clients into our Reckon One product. It is a multi-year journey. We don't have to rush it, but we do get some real potential value creation, and we get a lot of efficiencies internally by having everyone on our latest tech, on the One platform and on the Reckon One platform. So that's the core of the business group. I haven't spoken about it nearly enough, but last year we also finished with an acquisition in the business group. So we met a terrific business called Cashflow Manager. They've got two products, much like Reckon. They've got a desktop product being Cashflow Manager and a cloud product they were developing and investing in called Oki. They've got circa 20,000 SME clients and just under 1,000 accounting and bookkeeping partners. So they're a perfect business for us to roll up and integrate into the Reckon family. So we acquired them. The deal got completed just before Christmas. And from January 1, we completed the deal and basically own and operate that business. We've got a terrific team headquartered out of Adelaide of 15 people. And as I say, a client base around Australia of circa 20,000 clients. Our focus there is that we can take out some costs of the business because Oki was brand new and it was in its infancy. We don't need Oki because we've invested for many, many years into the Reckon One cloud platform and product. So Reckon One straight away replaces Oki and is a great transition option for Cashflow Manager clients much like our existing clients transitioning over to our RKN One base. So it's the exact same strategy whereby we can give our cash flow manager desktop clients an upgrade to the cloud, but direct into that RKN One ecosystem. By not investing in OKI and streamlining some of the efficiencies in the business, we forecast that cash flow manager business will generate just under 6 million of revenue, 3 million of EBITDA, and 1 million of NPAT, which is a contribution into our 2025 full year results, which is going to be terrific. I'm going to move through the next couple of slides really quickly. They are important, but I don't want to hone on them. You can certainly see a lot of this on our website. We always like to bring in a case study to talk about some of our clients or partners. This is Michael Fox. He's an accountant that specialises in art dealers in Melbourne. He's got one of the coolest accounting offices I've ever seen. It's like an art showroom. And Michael loves the simplicity, ease of use of RKN One. And for his particular client sets, just recommends them. And there's a quote in there that references the fact that other people might recommend other more complicated software or more expensive software. And he really finds that RKN One is the perfect solution for his clients. The other slide that I'm terribly proud of is about our culture in our Australian and New Zealand business. We employ just over 130 people in Australia. And for year on, year out, we continually score brilliantly in terms of our culture and employee engagement. The reason I put this in an investor presentation is I've long said that if you've got the best team, you can then go and execute on the best strategies and run the best business. I think it's very difficult to execute on the best strategy if we don't have a united and focused quality team behind us. So it's a passion of mine and something I'm very focused on. And pleasingly, our employee engagement scores are just through the roof and continue to get bigger and bigger. In fact, I work with Jess, our head of employee engagement and the head of people and culture, and we joke that we've kind of topped out. I don't think these can continue increasing. And if you've topped out, there's only one way to go. But no, we've got a great team. And the other point is that I would make is that it's not just a bunch of people who've been here a long time. We've got a lot of experience with 31% of our team being here 10 years or more, which is outstanding. But as you'll see, we've also got a lot of new recruits, with 45% of our team either new within the last 12 months or under 5 years. So a great spread of experience. And by having such a strong team, our retention was less than, our staff turnover was less than 10% last year. So we're retaining our team, which means, again, we can execute on our strategies faster. And all of that summarizes into these business group financials. And again, I want to be crystal clear. The financials on the screen here are only relating to that one group, being our SME focused business group. So overall, we did 42 million of revenue. You'll see our growth comes in our cloud subscription revenue, and we will continue to decline and churn our desktop clients. That is exaggerated by the fact that we are migrating our own clients from desktop to cloud. But it's also just the fact that we've got so many long-term loyal clients that they may retire or sell their business. So we are going to see that desktop subscription decline. The other line that's important is what we call other. That's particularly training and membership revenue. And again, that will have ebbs and flows, but we do see that reducing. Our big focus is growth in cloud subscription revenue. Very profitable division with 21 million of EBITDA. And as I mentioned earlier, we invested just under $10 million into the development of our business group products. I'm now going to jump into our US-based legal group. And different to the small business group, we work with enterprise grade, so mid to large legal firms. In fact, the third point there, we actually work with 12 of the 20 largest legal firms in the world. And 40% of AmLaw 200 largest legal firms. So we work with them because we provide workflow that links in with their scanning, printing, document workflows. We help them with their cost recovery if they're charging their clients for those disbursements. And one of our newer products is what we refer to as billing queue. So it takes their invoices and automates the process of reminders, statements, and collections, and can even enable a client to pay. So we've got two product sets, and we work, as I say, with the mid to large legal firms. We believe that this business really should be showing double-digit growth, and we were pleased with the trend of 2024 in the fact that our annual recurring revenue line grew by 13%. We've got a terrific management team. In fact, our management team, we acquired a startup business called ZebraWorks. So now the business operates under the brand of NQ ZebraWorks. We acquired them just under 5 years ago. Very experienced management team who have built software for legal firms in the past and sold those products. So they built a company called ProLaw. It was a widely used practice management system in legal firms in the US. They sold that business to Thomson Reuters many years ago. We met them when they were just at the start of building out their billing queue cloud product, and we acquired them, merged them in. They now run our business. And again, it's just a pleasure to work with such an experienced and the high quality management team that really knows legal tech and legal practice management space in such a big market as the US. We did do another funding round because this business is not yet generating cash flow. It does generate just under $1 million of EBITDA, but then we invest in development, which I'll show you in a second. So we believe we've got the product right for the market now, and we want to invest in the future. So we actually did another funding round of 4.5 million US, and that really is going to give us another 2 years of runway as we build out the sales and marketing investment, continue investing in development, and we believe now we can start to continue to see that double-digit top-line revenue growth. This slide just gives a bit more detail about the products. A bit like our business group, we've got some products that we've owned and operated for many years, and that's what we call our document workflows. And we've got our newer cloud products, what we call billing workflows. So our document workflows work within legal firms with all of their printers and scanners and multi-function devices. And it helps automate or route the prints and the scans. It counts the cost of those. It has a secure release printing functionality, and it can also push that information from a cost recovery point of view into the firm's practice management system. And our new billing workflow is all about taking their invoices and helping with the automation of that process, the distribution of those invoices, and the collection of that money. This is our newer product. It was only launched in the last 2 years, so still very new. But as you'll see up the top here, what we've broken out is our 13% ARR growth for the full year, 13% at the top line. 11% was that from our document workflows, which is a very established product and we believe still has a great future. But 89% billing workflow growth up to 600,000 ARR for the year. A couple of quotes from our billing queue newer clients. And again, I think the key here is with our document workflow products, we were selling to IT managers, practice managers, and administrators. And we've got some amazing relationships in those clients. What we really love with billing queue is we're actually selling to the managing partner or the partner and the owner of that legal firm, because we're helping them with their lockup. We're helping them with taking their invoice and actually getting the cash from their clients. And at the end of the day, that's putting cash in the partner's pocket. So we're getting some terrific results for these legal firms. And you'll see, I mean, this particular firm, 1 month after implementation, they'd already shaved 2 days off an administrative billing process. Or Paul down here from Kasner and Edwards, with PayQ, we found money, like literally found $30,000 to $40,000 of cash flow back into the partner's pockets. The financials for the legal group, it is a smaller part of our group, generating 12.3 million of revenue for the group and 1.1 million of EBITDA. What you'll see is, yes, the revenue is up 5% and EBITDA is up 18%. Importantly, after that EBITDA margin, we do invest 4.8 million into development costs. So that's what I mean. We are still funding this business. But for us, it's all in this subscription revenue growth. So for the full year, our subscription revenue grew 6%. But I want to link that back to our run rate grew by 13%. So we get a full year benefit of that ARR being up by 13% at the end of last year. We also do implementation and training, which was a rounding error and down 2% for the year. So we're really excited. Our view is that this business should be showing double-digit top-line revenue growth. And over the next couple of years, it's fully funded to not only generate more at an EBITDA level, but actually generate some more at an NPAT level. Winding up just before questions, the summary is, yeah, software as a service tech company, two really clearly defined businesses within the RKN group, both with their own strategies and their own opportunities. We feel really, really clear, and we have educated the market on what we believe is the best process to bring real shareholder return. And we do have clear 2 to 5 year strategies to do that. On that journey, we'll consistently deliver strong financial EBITDA and NPAT financial results. And with that, we'll continue to pay a dividend. So 2.5 cents last year, fully franked dividend. We've got plenty of headroom in our debt facility. So we finished the year with 2.9 million of net debt. Important to know that we did complete the acquisition of Cashflow Manager post the full year. So that net debt has grown to about 10 million. But because we generate cash, we'll be able to reduce that net debt in this financial year. And the highlights of 13% subscription ARR growth in the legal group, 7% cloud revenue growth, and 111,000 cloud users on our business group products. We continue to invest in scaling both of those businesses. And again, I just think that we finished 2024 not only with really strong financial results, but great announcements in the fact that the legal group's funded for the next 2 years to take advantage of the high growth opportunity. And the business group, we found a wonderful acquisition to welcome 20,000 new SME clients and a real nice revenue and EBITDA line into the business group. Thanks, Harry. I hope that's made sense and certainly open to take multiple questions.
Absolutely. Thank you, Sam. I think that was a really good snapshot of the business, very comprehensive, all the way from the small business, as you said, that deals with the SMEs, the legal side, financial results, and the RKN One platform, which looks really exciting. And I do have to mention those, the team culture metrics are very incredible, and I can see why you're very proud of that. So
thanks very much.
Yeah, we've got some Q&A questions in the chat, which is fantastic. I'm sure we'll get a few more coming through as well. But just to kick off, I've got a few of my own. If you look back at the start of the presentation, you mentioned RKN reported a 5% increase in ARR, annual recurring revenue, and a strong 7% growth in cloud revenue, which you also touched on in the summary. What do you think are the key driving factors that attribute to this performance?
Yeah, I think the driving factor is we're very clear in our two businesses, and we've been investing now for multiple years in both businesses. And if I start in Australia in the small business area, RKN One is fully featured. It's the most affordable product in the market by a mile. Our biggest competitor is clearly Xero in this market. You can get RKN One starting from $14 a month. It'll top out at $75 a month, fully featured, unlimited employees, bank feeds. If you compare that to Xero, you're more like $150 a month. So what we're seeing is we've already got a great client base, but the word is getting out there about an Australian-focused, Australian-owned accounting and payroll software company that is the most affordable, backed up by great service and support. I mean, we've got team members here in North Sydney that actually answer the phone and help our clients. So that's why we saw the growth in cloud subscribers in the small business product. The other point is in the legal group, where we're coming off a lower base, and our billing queue product is really at its infancy, but already getting great feedback, I should say. And the size of that market is huge. So to see the 13% ARR growth in the legal group, we think that that's the start of what should be many years of double-digit growth, just because of the scale of the TAM when operating in the US and the UK.
Yeah, absolutely. And that was my next question. Obviously, you said the legal group, they work with 12, I think, of the 20 largest legal firms in the world, which is incredible. Their 13% increase in ARR subscription revenue, I think you said with billing workflows doubling its revenue. Could you elaborate on what's behind that rapid growth in that department of the business?
Yeah.
Solutions.
So we love the fact that we work with so many of the top legal firms in the world. At the same time, there's only a limited amount of top 100 firms. So we really like going down into that mid-market, that 46,000 firms. And with our document, our scan and print products, they're very, very stable. They're well known. They've been in the market for many years. So we've got a great reputation there. Where we're seeing our growth is in our new cloud product, in the Billing Cube product. And as I said, we really find money for firms. So we take their invoices and we really streamline the process of collections, and we're putting cash into the partner's back pocket. That's getting great adoption, and we can bring real meaningful return on investment to those practices. We've been building the sales team, and we've had a great sales team for many years, but in the second 6 months, we really doubled down in the size of that sales team. So that's what's helped contribute to that 13% ARR growth in the US business.
Yeah, fantastic. Fantastic. Now let's talk about the acquisition of Cashflow Manager. So I had a couple of questions in the Q&A about that as well. So obviously Reckon recently acquired Cashflow Manager for 8.75 million, bringing in 20,000 new SME clients. What are the strategic advantages that this brings to the business, and how do they align with the long-term growth plans? And then I'll follow up with a couple of other questions on that as well.
Yeah, great. We were so pleased to meet and find the Cashflow Manager team and business. Everyone knows the largest players in our space. So we've been operating here for many, many years. Hopefully most people know Reckon and know some of our hundreds of thousands of users, but people know Xero, people know MYOB. There's not that many other providers of accounting and payroll, certainly that have 20,000 SME clients. So we met the Cashflow Manager team talking about helping them on their journey to the cloud. And very quickly, we realized that it just made sense for us to acquire them and roll them into our strategy. So there's two things. First and foremost, we really acquired a client base. We acquired 20,000 new SMEs with a view to upgrade them at the right time to our Reckon One cloud product. But the strength of the Cashflow Manager business, much like the Reckon business group, was that business was profitable already. So generating 6 million of revenue, and after we can save some costs because we don't need to double down on their cloud product, we can save some costs, and we're going to generate 3 million of EBITDA and 1 million of NPAT. So the business, primarily it was 20,000 new users that we can take on a journey to the cloud. But we were thrilled because it also gave us not only terrific top line growth, but EBITDA and cash flow. And that's really important to how we run our business. So it was just really a match made in heaven, and the strength of those two businesses coming together.
Yeah. And you said obviously the synergy of Oki as well. I think you said Reckon One can do everything that Oki can do already.
It can. Yeah, look, credit to them. Oki was neat. It was really nice and easy to use and had a great mobile app, all of which we've got in Reckon One. So we were just well ahead, and Reckon One is fully featured both on a mobile and a web. So we don't need to keep investing Oki. In fact, Oki will be, all of the Oki users will be migrated this year straight over to Reckon One, and Oki will be shut down because Reckon One's more fully featured. So we get to save all of those costs, and we'll keep running the Cashflow Manager desktop business. I mean, we own that product, we own the IP, we get the benefit of those clients and their subscription revenue and profitability. But importantly, from today onwards, they've got a very easy upgrade path to Reckon One, as and when they would choose to move to the cloud.
Yeah, okay. And I guess on the theme of acquisitions, do you think the business is now at a point where you're moving beyond organic growth, which can be difficult in the accounting space, and more towards acquisitions going forward to grow your client base, or what's the thinking there?
I think I've got to be clear. We think we've got a very clear path to shareholder return, and it's predominantly organic growth, and it's migration from desktop clients to our cloud product. That's our primary focus.
Yeah.
That said, we love it when we meet a business like Cashflow Manager, and probably the number one thing number one question we had as we've gone around and seen investors and shared this update was, Sam and Chris, our CFO, are there more Cashflow Manager businesses out there? The short answer is not that we know of, and if there were, we'd definitely be open to growing inorganically. So we've got an eye on that, but I want to be clear for investors, our focus is grow the Reckon One user base through organic growth, new subscriber growth. We've got a leverage of price growth in there as well, and we really want to migrate our desktop and hosted customers onto Reckon One. And we think the scalability and efficiencies we gain there is the best way for us to bring shareholder return. I should full stop there, but if an acquisition opportunity comes up along the way, we've got the debt facility that we can look at it.
Absolutely. Absolutely. Is there any reason why, say, that 20,000 database that's coming across from a Cashflow Manager, why you wouldn't be able to retain all clients? And I guess what's the ROI outlook? I assume you'll be able to cover that pretty quickly.
Yeah, definitely. I mean, our view is that if the client is comfortable with Cashflow Manager, that product's been in market a long time. We kept the most of the Cashflow Manager team. So we've got a great team of just over 15 people actually based out of Adelaide. And that team's very experienced. So we'll keep the Cashflow Manager product going for a number of years. But as and when any client says, I want this new feature, or I'm looking to go to the cloud, or do you have a mobile app for that? That's when we'll migrate them to Reckon One. I love your optimism, Harry. We would love 100% of those clients to move over to Reckon One. The reality is people don't like change, and when they change, that in itself creates an opportunity for them to look around. So realistically, we forecast there will be churn over that journey. It's just how do we minimize that churn? And we think we've got the right team and support services in place to make sure that churn is minimal, and to make sure the journey to the Reckon One product is very easy.
Yeah. Okay. Fantastic. Now, if we turn to the ZebraWorks as well, you've also committed with $3.75 million in additional funding for NQ ZebraWorks to accelerate cloud growth. Sorry. What are the opportunities that you see in the UK and the US legal markets that this investment will help unlock?
Yeah. So the 3.75 million US was Reckon's contribution. The total raise was 4.5 million. And pleasingly, so Reckon owns just under 78% of the legal group, and the other 22% is key management, particularly Bill Bice, our CEO, and Ken Basham, our CRO. And pleasingly, both of them contributed to this raise as well as another shareholder. And that funding is really about now putting our foot on the accelerator for growth. We've got the product, we've got the products, I should say, but we've particularly got BillingQ in market, in clients now. We'll continue to need to invest in development and features, but most of that funding is going to cash flow the business for another 2 years as we increase sales team headcount and marketing spend. And we started that in the second half of last year, so some of those costs are already in the business. And really, we're getting behind the new product, the BillingQ cloud product, and we would see, I mean, 89% ARR growth is off a terribly low base, but we would see that being high growth for a number of years to come.
Yeah, perfect. I've got a question from Bill in the chat as well. What is the ongoing future for Personal Plus?
Yeah, so Bill, Personal Plus is one of our desktop products that's been in the market for many years. We've got a great loyal client base, and we'll continue to support that product going forward for a number of years. That said, we now see Reckon One being a great option for those high net worth or personal clients. So for example, I run mine and my family's personal affairs on Reckon One. It's in the cloud. It's got a mobile app. There are some things that Reckon One might not do or do differently to our personal desktop product. So we'll continue to build them out. A long-winded way of saying, Bill, that personal remains a product that we'll support for many years to come. Our long-term strategy is that at the right time, we would want all of our clients to upgrade to Reckon One.
Very well. Awesome. Okay. Well, look, Sam, last question. I think we've covered a lot in this Q&A. So looking ahead, what are your top strategic priorities for 2025, and how do you envision Reckon's role evolving in the global software market? Obviously, you've got Reckon One, and you've got these investments that you're looking to expand the business with. What excites you going forward for the year ahead?
Yeah, it feels like a real privilege. I've worked at Reckon for many years. I feel like a real privilege to lead this organisation. We've got two really clearly defined strategies. And whilst they've got their own challenges, we think that there's huge upside in our business if we can execute in both business strategies. The legal group is all about double-digit growth with a new cloud product and more features to come in a massive market in the US and the UK. It's fully funded, and we're just excited about really focusing on that and supporting them. And in the business group, we continue to grow our cloud subscriber base, but particularly excited to welcome the Cashflow Manager team and client base into the business group. And we'll really focus on, as we have already at the start of this year, embedding them into Reckon, supporting those clients in that business. And straight away, we're going to see 15 to 20% top line and EBITDA growth by welcoming them in. So it's 2025 has certainly started well, and it's a very exciting year ahead for the Reckon Group.
Absolutely. Absolutely. Well, Sam, thank you so much for your time this morning on behalf of myself and Sharewise. And it seems like a very exciting business, and I'm very excited to watch the growth for this year and beyond. And we'll have to have another webinar in the future to catch up and see how it's all tracking.
That'd be great, Harry. Thanks very much.
Perfect. Thank you.